Hey, Villa.
Hey, Paul. Wow, you're there.
We're next to each other.
Wow, again.
This is good, isn't it?
Turning out to be a habit, I think.
It is.
Yeah.
I like this format, actually.
Yeah.
Much better than being virtual all the time.
Yeah. Of course, we're both COVID tested, so it's all fine.
It's okay. We're friends.
Yeah, of course.
Yeah, all is good between friends, right?
Of course.
And I suppose you got a joke for me this time.
I'm really sorry to say that I do. And this time I actually really mean that I'm sorry about this, but it is from a listener, but he or she decided to stay anonymous.
Okay.
And once you hear the joke, you will know why. So what movie was a contract killer watching when he decided to move from paper to electronic invoice?
No idea.
Kill Bill.
Oh, man.
Ooh. I told you it was bad. I told you it was bad. So I was almost like, I'm not gonna use that one, but yeah, it is what it is.
Oh, well, okay. Well, thank you, listeners, and welcome back, everybody, to another exciting episode of Fintech Daydreaming. I hope you all enjoyed last episode as much as Villa and I did. It was really cool to be hosting an episode with a live audience. And I, for one, would actually like to do that again. What do you think, Villa?
Yeah, it was really fun. Let's see if we can do it again soon.
I agree. It would be nice. So if anyone out there would like to have Villa and myself come and host a podcast live at your company event, then we'd be glad to do it, wouldn't we?
Yeah. Virtually or otherwise.
Yes, absolutely. But on with the show. And the podcast that dives into the world of banking technologies and the ever-changing landscape of fintech companies with real-life examples from guests and experts across the board. We scour the world to seek out interesting fintech stories and insights ranging from emerging technologies to game-changing disruptive ideas. Brought to us by the big banks, technology companies, and fintech startups, all seeking to challenge the status quo with revolutionary ideas and big, fantastic dreams. This, as always, is Fintech Daydreaming. Hey, Paul Krogdahl here, and I have the pleasure to be your host for this episode of Fintech Daydreaming. And as always, I have the full support of my wingman, Villa Sointu. Another exciting episode lined up today, Villa, I think. Don't you agree?
Yeah, I think it's going to be a fascinating topic today. Something we've kind of covered before a little bit, but it's always nice to get a different perspective, just like we did last week, or last episode, I should say, because it was 2 weeks ago.
Yeah.
But yeah, so it's always nice to take different perspectives into these kind of very common topics that we have, and I think we're going to have a good chat today.
I think so as well.
Yeah.
Now, one subject we have discussed in the past, right, several times, I would say, on the podcast is the ongoing digital disruption in banking and the accelerated drive by the pandemic that's also in there, right? It is no secret that most, if not all banks are refocusing back on their core systems and back-end processes. And looking for basically ways to modernize and ensure they are future-proof as we enter into a fairly uncertain future, right? Additionally, there is a fascinating convergence of technologies currently happening, which is bringing a wealth of, I would say, new business opportunities within the banking industry. As discussed before, more and more focus on public cloud platforms, AI, blockchain, 5G, and quantum computing, amongst others, are starting to see a fundamental sort of transformation of banking and financial services for us all, right?
Yeah.
So I would say one critical element in this transformation is the core banking platforms, both in regards to modernizing agendas by existing banks, but also as strategic technical platforms to fuel disruptive neobanks, fintech companies as such. And as such, there is a surprising trend we are witnessing, I would say a growth of new players in this domain. And as such, episode 6, who have entered the game with a new cloud native core banking solution with, I would say, a focus on, I believe, payments and digital wallets as a key area. And our guest today is Ian Keer, who is currently the regional director for episode 6 in EMEA. He has an extensive background and experience in financial technologies, and will, I hope, share with us today some of his insights and thoughts on the current state and disruption within the banking industry, seen from the core banking perspective, right? Yeah. Which will be cool. So, hi, Ian, and welcome to the show. Could you maybe introduce yourself and share a little bit about your background for our listeners here today?
I will, yes. Hi, guys, and thanks very much for having me. I think by extensive experience, you probably mean that I'm quite old, and I've actually been in financial technology for quite a while, ever since NCR were crazy enough to give me a job as a 21-year-old graduate in London over 30 years ago. And I've done lots of things in lots of places. Among those, in the pre-commercial availability of the internet world, working for a delivery platform software vendor on tandem fault-tolerant computers. We were delivering corporate cash management applications involving DOS applications in the customers' offices. For your listeners, their grandfathers may have told them about DOS. From there, I had a few years at IBM in the 1990s in banking solutions, which I very much enjoyed. And I went from there to set up an Asia Pacific operation in Singapore for a US core banking software vendor. That was very interesting. Came back to the UK, joined some old mates in building up a reconciliation solution company. From there, I got involved in things like ATM software and test automation around payments, card processing. And for the last sort of few years, I was the CEO of a company called Bolero, which is a software as a service platform for trade finance. And I was very much waving the flag for digitization in an industry which is very manual and paper-based. I left them last year and had the opportunity to join episode 6 or E6 to set up an EMEA operation. And that's what I'm doing right now.
Cool, awesome. So, I mean, today we're going to dive back into the world of cloud-native core banking solutions by taking a closer look at episode 6, like you mentioned, Ian. I wonder, Ian, from your perspective, how would you describe the trends we are witnessing in the banking industry currently in regards to core banking systems, and where episode 6 fits into this new emerging world?
A good question. I think having been around a while, it's given me the opportunity to see the evolution of core banking systems over a number of decades. And I think even predating me, if you go back to the 60s, 70s, maybe 80s, where banks basically bought mainframes and built applications in COBOL or even assembler. Oh, by the way, when I was at IBM in the 90s, we got involved in a number of Y2K migration and readiness projects. Yeah. And having seen some of the audits of the core banking code in the UK banks, it's amazing how many of those banks were still reliant at their deepest hearts on things like assembler and COBOL. And maybe some of that stuff is still around. But that's the way the business was done in those days. And then we migrated through to the client server world. And where we've got to now is very much pointed at cloud. I think for a number of reasons. And I think it's actually what's happening in the world at the moment, certainly the increased focus on digitization, accessibility. It actually has highlighted the limitations of traditional legacy systems. These systems were never designed for accessibility 24/7 with devices such as the smartphone. The release of the iPhone in 2007 changed the world. It changed customers' expectations. And this has really shone a spotlight on some of those limitations of these legacy core banking systems. And we're very much seeing the move now towards the cloud. We obviously can support that as episode 6 as a technology company. I'm not sure if you saw the announcement this morning that Standard Chartered Bank have basically said that all customer-facing applications will be hosted in the AWS cloud going forward. So this is an inexorable trend, which really points back to increased customer expectations and shining a light on those legacy systems deficiencies. So where we fit into all of this, we are a technology company. Headquartered in Austin, Texas. I joined to set up the European operation, which we're building out now. We're also represented in Singapore, Hong Kong, and Tokyo. And we basically license our technology to banks, to fintechs, and to others to enable them to take propositions to market that really pivot around the transfer of value between parties. So it is a payments-oriented core system, at the heart of which is a ledger. And that's what manages that transfer of value. And we absolutely apply our capabilities and value proposition to all the benefits that the cloud has to offer.
Yeah, I mean, we've seen the emergence of these kind of neobanks or digital native banks lately, for sure. And I guess many companies like yourselves have kind of noticed this opportunity to kind of create something completely new in terms of the core banking. And what I'm trying to say here, of course, is that you're hardly alone in this space. I mean, there are, for example, few come to mind, Mambu, Thought Machine, we had as a guest earlier. How do you differentiate from these players? I mean, there's plenty of competition out there. So what do you think? I guess what I'm asking is, are your unique selling points of episode 6?
That's a great question. And yes, it is quite a busy marketplace. And I think there's a number of sort of core attributes that we bring that really are differentiators. In terms of core systems, I think what we focus on is obviously we sell to tier 1 banks, and typically where we operate as maybe the bank within a bank to enable them to take propositions to market. Again, talking to that limitation of those legacy systems. The core of what we do is this ledger system, which is very, very flexible in terms of how we can define relationships within the accounting transaction. It's truly multi-value, not just multi-currency, but we can also then bring in dynamically different units of value as part of that transaction, that authorization process, and we can define relationships within the ledger on a one-to-many or many-to-many type basis. So that's the fundamental heart of the system. It gives a lot of flexibility to banks and fintechs to launch value propositions around payment and value transfer offerings. Surrounding that, we have the capability to develop products and customize products online, real time, in data by business users. So not waiting for product roadmaps or code schedules to come around. It actually is an online real time product development environment in terms of business rules, fee structures, risk profiles. So again, a lot of flexibility. We surround all of our functionality with an API connectivity framework, which has close to 600 RESTful APIs. And our philosophy is very much about integration with adjacent space, technology stacks, and ecosystems. So we're there to coexist. And we also have this concept dynamic value unit conversion. So a lot of flexibility in dealing with these different units. For example, we're doing some very interesting things with loyalty and reward points and how we might bring those into an authorization process, and being able then to dynamically take these products to market. The company's background is very much in card processing. So the 3 founders have been very much involved in that. So when we're talking about core banking, I wouldn't position us as a core banking system for a massive tier 1 bank. I say we look at the bank within a bank, the application channel for a fintech or for a neobank. Typically, they're not delivering massively complex mortgage applications or very complex investment products. They will quite often have a solution that does tend to pivot around maybe a card, a digital wallet type offering, with the ability then to add on additional functionality. And we've built that into our platform as well in terms of savings and loan products. So that absolutely supports that proposition of speed to market for our customers.
All right. A bit of a spin-off question, maybe, not perhaps something we discussed before, but one of the discussions that I often have, especially with my banking colleagues, is about the definition of programmable money. And the term programmable money kind of comes from the blockchain world. So if you talk to the crypto folks, they always talk about we're going to create a new world of programmable money, and then everybody will be able to create these rules around this smart money. And my kind of problem with many of those narratives always is that money has already been programmable for a very long time. The only question is that who gets to be programmed that money? So the question is that whether or not the money is programmable, the question is by whom? And how do you link the necessary permissions to allow for this programmability of money to exist? And now, how you describe the episode 6 platform as a modern core banking platform, cloud native, and with high level of configurability and all of those things to kind of create these rules around payments, as you mentioned. I mean, to me, that sounds like a platform for programmable money. Would that be a right definition in your mind?
I think it is, and I think that actually one of the projects that we are looking forward to moving forward and starting in the new year in Europe, very much working with IBM, is with a fintech called Arise. I think you are very familiar with those guys. Yeah. And that is basically their concept. It is all about digital cash. Yeah. And they have chosen episode 6 as their core banking platform. I think because, as far as we're concerned, cryptocurrency, they're actually using stablecoin, which I think is obviously a less volatile, cryptocurrency type environment. And their concept is actually quite sort of risk managed in terms of how the stablecoins are backed to reserve currencies as well. And as far as we're concerned, those units of value are exactly that. They can be managed. They can be part of that transaction process. They are just the same for us as if we were dealing in a multi-currency, fiat currency type environment. Obviously, there are some intricacies and different interfaces and some of the configurations that we will be putting in place. But I think personal view is with the drive to digitization, but certainly if there's a positive out of 2020, like this whole pandemic thing, it is that it's built up some real momentum in digitization. I was having a conversation the other day. We're actually looking at how we apply our platform to trade and supply chain finance use cases. And I've mentioned that's been an industry that's been bogged down in paper and manual processes. And this year has removed what I call the Grace Hopper objection. Grace Hopper was a pioneer of the IT industry. She invented COBOL in 1959. And she said that the worst thing a human being can say is, we've always done it this way. And that has bogged down a lot of industries. And in 2020, that objection goes out of the window. It just does not stand up anymore. So with the drive towards digitization, absolutely cryptocurrencies are going to be pivotal to that. You see what some of the governments are doing in terms of there's some sort of state and central bank initiatives. And I think that actually highlights in core banking terms the need to have supporting systems that have that flexibility to manage those units of value just as that.
Yeah, that's an excellent spin-off point. And I really like the kind of comparison or the relevance of the current situation with the COVID crisis, because we've really seen acceleration of digital initiatives from government and regulatory bodies in all sorts of ways. And I think this really has accelerated the development process in a lot of these things, including, for example, the digital euro by the European Central Bank, which is now under comment rounds.
Absolutely, it is. Yes. Yeah.
Okay. Well, don't get me wrong. There's been a lot of very bad things that happened this year, and and we mustn't forget about that. But
of course,
I think if you seize the positives, it is that we really, as an industry, as a technology industry, this is the time now, I think, to push ahead with some of these digitization initiatives.
Yeah. Yes. Absolutely. But unfortunately, as always, time flies when we are having fun, and I hope our listeners are having fun as well. So we're almost at the time to close yet another episode of Fintech Daydreaming. But before we close, thoughts and we tend to jump off tangent, right at the end, and today is no exception. So I thought we'd have a look at something completely different, as we tend to do. I think it has been impossible to move in the fintech world and not see the ongoing news regarding Ant Financial and their IPO. Set to be the world's largest IPO, only to be halted by the regulators in China. I think, 6 days before?
Yeah.
I think we have seen a roller coaster ride on this, with Jack Ma getting very vocal in certain areas. I'm sure this is only a small bump in the road, right? And we will see Jack and Ant return maybe in 6 months or so with a new IPO on the table. Who knows? But having to return all that investment money cannot have been a nice pill for Jack Ma to swallow. What's your view on this one, Ian?
I thought it reminded, again, back to the fact that I've seen a few things been around for a while. It reminded me a little bit of his speech to the Shanghai Bund Summit a few weeks ago. Yeah. A bit like Bill Gates's speech to the Bank Administration Institute in 1994, when he said that the banks are dinosaurs. Only this time, Mr. Ma decided to have a pop at the regulators rather than at the banks. And obviously regulators have got long memories, and they're quite sensitive. And I think his point was that regulation was stifling innovation.
Yes.
And I think they gave him a bit of a rap across the knuckles for saying that. My take on all this actually is it's actually raised some interesting questions about what's happening in this industry in regulation. And because this industry is changing really, really fast. As I say, with fintechs and the ratio between fintechs and banks, it's not the same regulatory landscape that it was. And look, no one wants another global financial crisis. And a personal view, that was a failure of regulation as much as it was a failure of human greed and lots of other things that were going on. And then what we saw after the GFC was that, in my opinion, the regulatory pendulum swung back too far. And certainly from my experience in being involved in trade and supply chain finance, banks were basically kept out of funding transactions and providing liquidity and risk mitigation in places where they should have been doing it, but they couldn't. It was just too difficult to meet the regulatory compliance rules and all the KYC they had to do. And that's kind of wrong as well. Yeah. And then obviously fintechs come in to sort of bridge the gap, flying under a slightly different regulatory radar. But we haven't got that right either. If you look at the recent experience with Wirecard, again, that was a failure of regulation as well. So my point is, I think the whole regulatory landscape needs a review because of the different players that are coming in, because of the need to reach into different communities in terms of accessing financial services. And we've got to actually assess it based on what the technology is now enabling. And I think we're far from having it in the right place at the present time.
I agree with you to a large extent, but I also think I can see the perspective of the regulators on this one, right? And Financial basically being a technology company who was, for the most part, dealing with loans where the risk was being passed on to the banks. And the regulators, for obvious reasons, coming in saying, if you want to act as a bank, we need to regulate you as a bank. And based on that, the liquidity that you've got and your ability to support the large amount of loans is not high enough. And you're putting too much risk on the banks that are backing you on this. And until you can equalize that and behave a little bit more like a bank in a banking world, we would like to halt the process. So I can sort of see it from both perspectives. I don't know, Villa, what do you think?
Yeah, I think, a couple of things. I think Gates said that we need banking, we might not need banks.
Yeah.
And what Jack Ma said in this kind of speech, that was kind of one of the tipping points, I guess, of this conversation, was that that you shouldn't manage train stations in the same way as you regulate airports, for example. It was a little bit unclear to me whether he was referring Ant Financial as an airport or a train station in that case. But anyway, considering that airports probably have a little bit more regulation than train stations, maybe he considers it as a train station. But nonetheless, I think these quotes will already are part of the fintech history, and remains to be seen how significant this actually is. But one thing is for sure, Jack Ma suffered some financial losses out of this.
Yeah.
In his category, it doesn't really matter much at the end of the day, and I think it's going to be just a slight delay in this. And Financial has done some really incredible things. You can just see what they're doing in China, and it's easy to see that.
Yes,
it's basically everywhere. It is, in one way or another, it's going to be a future of financial services in all around the world, I think. Now, the interesting part actually mentioned this pendulum of regulation that kind of went a little bit too far after the financial crisis for banks. And it's always interesting to see that there's always an opposite counter reaction to something like that. So we always somehow end up talking about blockchain in our episodes. I don't know why, but I think the whole kind of cryptocurrency Bitcoin thing was kind of the opposite force to all of this regulation in a way, because all the companies that we saw building on this foundation of cryptocurrencies, and which is now kind of giving in a little bit because the regulation never materialized in time. But all of those companies had the same notion. They said that if we build this stuff on this kind of free network, free system, then we're able to make it much more efficient and much more attractive and better ultimately.
Yeah.
That hasn't happened yet, not in the cryptocurrency way of things at least. But yeah, I think it's always interesting to see that. I consider that type of narrative almost like the inevitable counter reaction to too much regulation. So the best way, of course, as always, is to find a balance. Remains to be seen whether that balance will ever be found.
Absolutely. And I mean, let's be honest as well. Most digital online payments in China are managed by two technology companies.
Yeah, very close loop, by the way. So,
yeah. And Financial and WeChat, right? Neither of them being banks.
Yeah.
So interesting future, absolutely.
Yeah.
Yeah. Any last words on this, Ian?
I think that the world is changing very fast, and we all have to adapt around that. And so, flexibility is the key. I mean, they where and Financial came from was a marketplace. Yeah. And I think the encroachment between marketplaces in terms of buyers, sellers, the physical movement of goods, and financial services is going to get increasingly blurred. Yes. And that actually is a function of digitization, being able to interchange data through APIs. Back to the original point of the conversation around what's happening with cloud. So the technology is there to facilitate all this, and we've got to work out a way of keeping everybody playing by the rules that recognizes that.
Yeah, absolutely. Awesome stuff, guys.
Yeah,
it's been a fantastic episode, but unfortunately, our time is up. But Ian, Villa and I would like to give you a chance to let the listeners know how they can find you and get in touch if they'd like to discuss more about episode 6.
Yes, please do. I'm very contactable and accessible. I'm ian.kerr, Kerr, at episode6, all one word.com. We just revamped our website as well, so have a little look at that. There's some quite cool stuff there. And we'll be very keen to follow up on any of the topics that we've touched on.
Great. We'll have a look at your website as well, and we'll link it in the description at the bottom here. So fantastic. Thank you again for coming on the show, Ian, and sharing some great experiences and insights with us here today. Lots of interesting stuff about E6 and where you guys are heading. But most importantly, thank you, our dear listeners, for hanging out with us for yet another episode. Now, do you have a fintech subject you would like Villa and I to cover in a future episode? Or maybe you have a great story to share and would like to join us as a guest on a future episode? Or did you come up with a banking joke that you think other listeners might love or love to hate for that matter? Send us an email on hello@fintechdaydreaming.com. or ping us on LinkedIn, Twitter, YouTube, or the Anchor FM page and get in touch. And as a last point, Villa and I have decided now that we've got a domain, we'd like to build a website to go with it, a nice simple one. So if you're a up-and-coming designer, website developer, and would like to give us a hand, then reach out and let us know on that as well. We'd love to get in contact with you. Villa and I will be back in 2 weeks' time with a new guest. So see you all again then. Thank you for joining us and listening. This has been Fintech Daydreaming.